And I think you're going to find a lot of companies that are in the pathway of this multi-hundred-billion-dollar bazooka because this bazooka got pulled out about 2 years ago. It's
Mhm.
stayed out ever since, and they just keep reloading it with more and more ammo. My target, based on this linear regression model, which I think is a pretty good one and has a pretty good track record here, would be $150,000 to $200,000 on Bitcoin before the end of the year. And the current leg higher, the current rally is consistent with this cycle higher.
Hi, and welcome to Being Exponential with Luke Lango, where we'll go over the markets, the economy, lifestyle, and technology, all from an exponential perspective. My name is Brooke. It is July 15th. Let's dive right in. All right, Luke, we're going to talk. I want to start today off with a company we've actually talked about a couple of times, and it is a very positive turn of events for that company, MP Materials Corp. Looks like they just inked a deal with Apple, about $500 million, half a billion, for them to be one of the primary providers of rare earth magnets or minerals for Apple. You talked about them. You had pretty good reviews about them. So how does that feel to be proven right?
Yeah, well, I think a lot of guys saw this one coming. A lot of analysts saw this one coming. So yeah, we saw it coming, but I'm not going to give ourselves too much credit for it. You can see the stock chart here. Pulled it up for you. Straight line elevator shaft higher, right? We bounced off the 200-day back in what was this? May of 25, right around $20. Boom, all the way to the top of the channel, around 37, retreat down to 30, and then we got those two big deals. Boom, we got the Pentagon deal, brought us up to here right around 45. Then we got the Apple deal, bringing us up to 61 right now, clearing, very importantly, clearing the previous all-time high for MP stock around $58 from April of 22. So technically this one's just, I mean, it's gone crazy. It's obviously RSI of 84.4 right now, so technically way overbought. It wouldn't chase this one here, but long term, I think the future is very, very bright for this company. To recap, the bull thesis is pretty simple, right? We are entering the era of physical AI. That is AI moving into the world via physical devices, whether that's humanoid robots or AI glasses or self-driving cars. In a lot of those applications, not all of them, but in a lot of those applications, especially in humanoid robots, rare earth magnets are a mission critical piece of the puzzle. Humanoid robots have actuators all over their bodies, which turn um, electrical energy into mechanical energy. You obviously need a magnet to do that. So wherever there's an actuator on a humanoid robot, and there are dozens of them, there are magnets powering those actuators, turning electrical energy into mechanical energy. You don't, obviously, for the amount and strength of conversion you need for a humanoid robot, you can't just use any old magnet. You got to use a rare earth magnet. So rare earth magnets are a huge piece of the puzzle for the physical AI boom, especially as it relates to the humanoid robotics vertical. Most of those materials come from China right now, depending on who you talk to, anywhere from 80 to 90%. And we need to get a domestic source of that, right? Because China's our biggest competitor in the AI arms race. So you can't rely on your biggest competitor to supply you with a mission critical piece of the race.
Of course.
So we need to build our own domestic supply chain. MP is at the heart of that. And so the bull thesis here is okay, there were a few domestic suppliers of rare earth magnets. MP was the only fully established one. That's why we liked the stock about a month ago. But now you like the stock because, well, the US government and major US companies, Apple, are not just pivoting as we expected to build a domestic supply chain for rare earth magnets, but they are centering that supply chain around MP. The Pentagon chose MP. Apple chose MP. And so they have all this new funding. They're going to build new facilities. Their production is going to just scale rapidly. This company is very quickly becoming the arguably the most important supplier of the physical AI boom. And that alone means the stock has massive long-term upside potential. So I do like the stock long-term, but I would not chase it here in the short term. Again, RSI 84.4 broke above that previous all-time high. This is a very natural place for this one to consolidate, take a breather, maybe pull back as much as 20-25%. It is up more than 100% in just a week or so. So for it to pull back 20-25% totally feels normal, but I would buy it on that retreat. I think this is when you want to buy on big dips because I think the future, long-term future on this name is pretty bright.
Yeah, definitely. It seems like it's establishing itself as that flagship American rare earth producer.
Yeah, that's exactly what they're doing. Is that there is again the first part of the bull thesis was we need to build this stuff in America, and so then you had to take a guess as to which one are they going to choose, right? Is it going to be MP? Is it going to be USA Rare Earths? There are a couple other ones out there that were kind of dabbling in the space. So the bull thesis a month ago required some guessing, some educated
Right.
guesses. Who is going to be the winning horse in this race to build out the domestic supply chain for rare earth magnets? Now the guesswork is gone, essentially, right? I mean, I guess Meta could choose somebody else. I guess Tesla could choose somebody else. But the fact that the US government is choosing
Mhm.
MP, the fact that Apple is choosing MP, a lot of magnets and iPhones, um, that I mean that to me that's all you need to know. Yeah, there may be more winners. I think USAR could be a big winner in this space. Emphasis on could, but as of right now, MP is clearly the winning horse. Guesswork's been removed. Bull thesis is a lot clearer. That's why the stock's been on an elevator shaft higher. And I do think the future there is bright for the long term.
100%. Yep. Yeah, so definitely don't buy it after it just doubled, but keep an eye out for MP materials in the long term.
Yeah, it tripled in about 2 months, really, 20 to
Yeah.
60.
Wow. Well,
Yeah,
that's
there
why you
you
gotta
go.
listen to Being Exponential,
These, these are the sorts of gains that are happening in the market, right? The market's
Yeah,
been like quote unquote flat for a few weeks, right? But you're still getting massive gains, single stock winners like this. This is a stock picker's market, and it's rewarding those that are going out on the risk curve and betting on a lot of exponential names. Like that's the stuff that's where the alpha's happening right now. And so just be aware of that. That's not going to be true forever, right? Markets don't have
right.
the same attitude or flavor or feel forever. But right now, the attitude, flavor, and feel is very much risk on, and it is very kind of risk on names like MP that are seeing a lot of inflows. Definitely over the past few weeks, and I would even argue over the past few months.
Gotcha. Okay. Now on a slightly more negative note, you mentioned before that you didn't believe inflation would be a long-term issue for the economy currently. However, the CPI reports came out and the numbers are a bit higher than comfortable. Could you, expand on that?
Yeah, so I would say that the inflation report, we had the June CPI report on Tuesday, July 15th, morning of Tuesday, July 15th. It was not great. The headline numbers were like okay. I think it was 2.7% versus
Right.
2.6 expected. Core was 2.9 as expected. But the trend is the worrisome part, right? So if we kind of pull up our inflation chart here, nothing looks too worrisome here, right? The orange is the CPI inflation rate. The white is the Cleveland Fed forecast, their nowcast CPI rate for the period ahead. So this doesn't look too worrisome. This doesn't look like reinflation, but kind of underneath the hood, it's okay. Inflation rose in May, inflation rose in June, and it's going to rise again in July. So we're really looking at 3 consecutive months of, albeit mild, but still 3 consecutive months of reinflation, both on core inflation, and the chart looks the same. Or this is headline inflation. The chart looks the same for core inflation. So May, June, July, we now are basically looking at 3 consecutive months of rising inflation. Again, the pace of the increase in inflation is very tepid, very small. No reason to ring any alarm bells right now, sound any alarm bells, but the fact that we are rising does show that the tariffs are having some upward price impact. They're creating some upward price pressure. And the key thing to note here is that in the months of May, June, and so far in July, trade tensions have been relatively low, right? We haven't really had a re-acceleration, a re-escalation of those Liberation Day tariffs. Right now, we're getting a threat of them, but nothing has been, signed and sealed and actually enacted. So the fact that a very mild, reduced version of the trade war is creating 3 straight months of reinflation is a warning shot that if we do not get the trade situation resolved, and if the trade war does re-escalate to those Liberation Day levels we saw in April, and a lot of those tariff rates do get enacted, if this 35% rate on Canada does get enacted, if this 30% rate on Mexico and the EU does get enacted, if the 50% on copper does get enacted, if all those things do get enacted, then the currently mild reinflation trend we are seeing will turn into a very severe and quite worrisome reinflation trend. So I view the June CPI report as a warning shot. Hey, we got to get deals done or else a return of inflation will derail the economic recovery, will derail you could call it the Make America Great Again economic agenda. You could, whatever you want to call it, it will derail economic momentum over the next 12 to 24 months. We got to get trade deals done in the next few weeks. We got to stay away. We got to avoid a re-escalation of the trade war that we saw in early April. I think that will happen. We saw that NVIDIA is now being allowed to sell their H20 AI chips to China. That was a big part of this trade war, was that Trump was restricting
Right.
NVIDIA, AMD, and others from selling AI chips to China. The fact that that is now being allowed, I think, is the latest kind of domino to fall in that people call it the taco trade. Trump always chickens out. I call it the EACO trade. Everyone always chickens out because if inflation becomes a problem, then it's a problem for everybody, right? It's a global thing. We do not want, nobody wants to be the one that, pushes the economy over the edge. In a globalized economy, we're so connected that I don't think it's going to happen that way. So when it comes to inflation, I think that we got a warning shot, but I think we're going to avoid the worst case outcome here because of we're going to get trade deals done in the next few weeks. Not to mention, I do think there's going to be a massive productivity unlock from artificial intelligence in the next 12 months alone. I think that we are seeing a rapid advancement in the capabilities of foundational AI models like ChatGPT and Grok and Gemini and Claude, and that's going to allow for some pretty big applications across the enterprise over the next 12 months, which is going to unfortunately, I think cause some labor displacement, and I think
Mm.
that fortunately is going to put downward pressure on inflation. So I do think that the inflation warning shot we got in the June CPI report was just that and will remain just that, a warning shot. We will avoid the worst case outcome, but nonetheless, it is a risk worth monitoring, and that's coming from me, a guy that's normally very bullish and optimistic and loves to see the bright side of things, always glass half full. I do think that we should acknowledge the risk present in the June CPI inflation report.
Gotcha. So safe to say we are still seeing it. We're just observing it at the moment. We're not taking action against, the Trump trade war actions that he's been doing. Some of them, which could be potentially very critical to the market. For example, the 50% copper tariff you mentioned would
Mhm.
disrupt several industries across the board because of how important copper is. So some of these, Trump moves are a bit extreme, but at this point in time, we're viewing it as a warning, not as actions we would need to take as investors.
Yeah, I mean, I would say they're purposefully extreme. The moves are purposefully extreme. It's brinkmanship, pushing
Mhm.
everything to the envelope, right? That's what it is. And the EU's even getting involved in the brinkmanship game, right? Like they're like, hey, if you keep doing this, we're gonna team up with the other countries you're going after, and we're gonna come after you because all of us banded together actually stand a chance. So they're all just doing brinkmanship. But again, the thing is that in a globalized economy, um, all it takes is one madman to blow the whole system up, and nobody wants to be that madman. Like I don't see that happening. It's not going to
Right.
be the EU. I don't think Trump wants to do it. Trump really is focused on his economic agenda. I don't think he's going to risk the progress of that agenda for a 50% tariff on copper. I don't think it's going to be China. I don't think it's going to be. Uh, Mexico or Canada. So I mean, if it's not going to be the EU, US, Canada, Mexico, China, I mean, it's not going to be anybody. And from that perspective, I think all of this gets resolved pretty diplomatically, and it will allow for the tech news to take center stage again, and for tech stocks to rally. Because that's really what's happened, is that the news flow in AI has been really
Mhm.
good all year long. Like literally every single day of 2025 has had another series of good headlines as it relates to the development of artificial intelligence models, or the rollout of new AI infrastructure, or the deployment of new AI services, or the creation of new physical AI devices. Every single day, there's been a flurry of good headlines as it relates to that stuff. But every once in a while, the trade stuff will take precedence over that.
Right.
But fortunately, the trade stuff has proved to be ephemeral, and it kind of comes and it goes. It's fleeting like the wind. And then when it goes, then boom, here comes the tech stuff to drive tech stocks higher. So I think you just got to be focused on the tech stuff. Be aware of the trade stuff. Be aware that if it lasts, longer and gets bigger, then it could be a problem. But for right now, if it continues to follow the pattern of being fleeting, then stay focused on the tech stuff. Buy dips in tech stocks when the market gives you those opportunities. And yeah, just be positive on the future of artificial intelligence.
Gotcha. Okay. Yeah. So earlier you mentioned this is a stock picker's market, but if we take a bird's eye view of the market as a whole,
Mhm.
things are stalling around all-time highs. But I do recall you saying that we will see a rally in the second half of this year. Do you still believe that? Do you think the writing's on the wall for that to happen?
Yeah, so I think we got trade deals. We're
Yeah.
going to get trade deals in the next few weeks. I think it's going to cause, or it's going to put this trade drama in the rearview mirror finally. So that's going to be a positive upside catalyst for markets. I think we are going to get continued strength in the AI just industry, whether that's more spending on AI infrastructure, or breakthroughs with AI models, or more rollouts of self-driving cars or humanoid robots. I think you're going to get a lot of good news on that front. That's going to be an upshot for markets. I think we're also going to get rate cuts. I do think that the Fed will cut rates two to
Mhm.
three times in the back half of the year. I think that'll provide an upshot for markets. And then I think earnings are going to be really, really, really good. I think that's actually going to be the big catalyst in late July going into August is earnings. Because let me show you this chart right here. When we look at earnings estimates for, this is the S&P 500 earnings estimates for the second quarter is your orange line, and the third quarter is your purple line. You can see how these estimates have just absolutely melted since the trade war started, right? I mean, we kind of had largely stable estimates throughout, January and February. I mean, they were falling, but mildly falling. And then right here is April. Okay, so this is April 1st. And then that, obviously Liberation Day was April 2nd. And then look, I mean, the purple line just drops and it hasn't really recovered, a little bit of a recovery. And the orange line just drops and not much of a recovery, actually, pretty much no recovery on that one. So Q2 and Q3 EPS estimates for the S&P 500 have absolutely melted over the last 3 months. Both of these, actually, the purple line has dropped 4%, so is the orange line, a little bit more than 4%. So we're seeing a complete melt in the estimates. The bar has been lowered, if you will, going into the Q2 reporting season. Is that fair? Well, I don't think so. If you look at the City Economic Surprise Index, which is an index, the city has this index that measures, okay, you have all this economic data that comes out every single day. How is all that data coming in relative to expectations? Well, we'll look at that, and it's pretty stable. If we kind of look at this January to February period, right? I mean, there's been volatility, but on a net basis, this is where we were right before the trade war, right? This is April 1st, March 31st, minus 4.4, and now we're at 2.8. So we're actually higher than where we were when the trade war first started. And yes, the trend has been volatile, but on a net basis, again, no real change there. And when you look at the Dallas Fed's weekly economic index, which is something I like to monitor, they kind of compile a bunch of high frequency data to see how the economy is doing on a high frequency basis. The Dallas Fed maintains this. It used to be the New York Fed, I believe. Anyways, here we are at the start of the trade war. We're at two. This is a approximation for GDP growth, real GDP growth. 2.2% right before the trade war, and we're at 2.5% right now. So yes, volatile had a dip, but then we had a recovery on a net basis, no real change, 2.4 to 2.5. So considering that City's Economic Surprise Index is basically where it was before the trade war started, the Dallas Fed's weekly economic index is where it was before the trade war started. You could look at the ISM manufacturing report. That also took a dip, but then recovered pretty much where it was before the trade war started. ISM services, same story. All of this high frequency economic data is saying the economy has actually held up pretty well in these last 3 months. Yet in these 3 months, analysts have consistently revised lower their EPS estimates for Q2 and Q3 on trade war fears. That disconnect, I believe, is the opportunity or represents an opportunity for companies to smash it when it comes to this reporting season. I think they are going to beat estimates, knock estimates out of the ballpark. I think they're going to report really good numbers. And I think more importantly, they're going to give really good guides for the back half of the year. Because a big theme when the last reporting season came around, which was right around Liberation Day in April, was uncertainty about what's going to happen next. So a lot of companies pulled their guides. A lot of companies didn't change their guides and simply said, we have no idea what's going to happen. So we're not changing anything higher or lower. We basically just have no idea. So there was just a lot of uncertainty in the guidance. I think that uncertainty gets replaced now by a much more positive outlook on the second half of 2025. So then that allows EPS estimates for Q3, Q4, and into Q1 of 26 to move higher. When EPS estimates move higher, forward EPS estimates move higher, that provides a foundation for stocks to move higher. So I think we're going to get a really strong Q2 reporting season, and that's going to act as a really strong upside catalyst for stocks over the next few weeks once we get these trade deals done. This is going to be especially true, in my opinion, with tech stocks, because that's where EPS estimates have really come in quite a bit, especially on the Magnificent Seven. We
Hmm.
look at the Mag 7 estimated EPS growth back in January for Q2, it was like 20%. Now it's down to 14%. That same kind of downward revision, -5, -6, -7 points on growth, is pretty consistent across the board for a lot of AI stocks. Yet from where I sit, how I read the news, what I'm seeing out there, I'm seeing no slowdown whatsoever in AI momentum, whether it's at the construction layer, the infrastructure layer, that builder layer, or at the application layer. I'm not seeing any slowdown at all. And so I think when they report numbers, they're not just going to be better than expected. They're going to be way, way, way better than expected. And they're going to have guides that absolutely blow lower estimates out of the water. And so I think that, again, the strong earnings season is going to be an upside catalyst, not just for the entire market, but very specifically for tech stocks, for AI related stocks, because that's where all the growth momentum in the real economy is right now.
Gotcha. So it sounds like a case of under promising, over delivering, because it's almost a clear disconnect between market sentiment and the data that you just pointed out to us in terms of like the analytics of the market currently.
Yeah, I wouldn't say it was it was more just like, I mean, if I was a company, again, I'm an optimistic guy, glass half full, I love to give optimistic guides.
Mm,
If I was a company reporting earnings in April, I would also say I have no idea. Like
right.
I don't know what's going to happen in the trade situation, and therefore I can't tell you how much I'm going to be paying for my stuff, how much I'm going to be charging people, how much it's going to impact consumer spending. I can run models and simulations, but I have no idea what the actual outcome is going to be. So I don't know if it was so much under promising and over delivering as it was everybody just had blindfolds on, and now those blindfolds are like coming off, and we're seeing, hey, you know what? It's sunny out. It's actually a nice day out. It's not a storm. And so I think that's more what's happening. The clouds are lifting, if you will, on the outlook for trade and by extension for the economy, and therefore for all these companies. So I think that's more what's going on as opposed to under promising and over delivering. Because we even saw really aggressive companies that love to guide super optimistically kind of say, we don't really know what's happening, so I can't give you any confident outlook.
Gotcha. So now with your vision for the second half of the year, how would we leverage that, Luke? What should we keep an eye strictly on AI, or is there another umbrella we should be looking at?
I mean, my motto has been and still is AI with AI. Like
Mm,
even in our model portfolios and our subscription services, we're we've loaded up on quite a few stocks, and we're trimming down where there's just mitigated AI exposure, because I want AI exposure. I
Yeah.
don't want names that are like, okay, maybe that there is kind of an AI story here. No, I want an AI full story. I want AI in chapter one, and I want AI in chapter 29, and I want the whole book to be about AI. Like that's what I think right now. That's how I'm feeling right now. Because again, I think we're entering that 98, 99 moment.
Hmm.
98, 99 were the two best years of the dot-com boom. I think we're entering what could be the two best years of the AI boom. In 98 and 99, yes, you did have a rising tide lifts all boats across the whole market, but it was disproportionately so for tech stocks, right? I mean, the entire NASDAQ doubled in 99. The entire NASDAQ doubled. The entire index doubled. That's wild behavior. And
That's
so, yeah, like that's never happened. That hadn't happened before. It hasn't happened since, right? So, but I think it could happen again. I think it could happen again. And so I want to be exposed to the NASDAQ. I want to be exposed to tech. I want to be exposed to AI. And I think the closer you are to the epicenter of this boom, the better positioned you will be. And again, we've talked about the ways to do that. And it's at the infrastructure layer, and it's at the application layer. So the AI Builders 15, we've talked about them before. The AI Appliers 15, talked about them before. That's where you want to be right now. You want to be all in with artificial intelligence, with both the companies building the infrastructure for it, semiconductor chip makers, semiconductor equipment suppliers, fabs, lithography machines, EDA software. You want to be at that layer, and then you want to be at the application layer. Companies that are deploying AI software throughout the enterprise to consumers, physical AI applications, self-driving cars, stuff like that. That's where you want to be. I think that's where the growth is going. Most of the growth is going to be over the next 12 to 24 months.
for that. And yeah, that only makes sense. Because Nvidia just crossed that $4 trillion market cap threshold, so
Hmm.
that's only a sign of things to come for the AI sector.
Yeah, so I think that makes it more valuable than all but four countries in the world. And I think the
Yeah,
other two, I mean, you got US, China, Japan, and Germany. I think Japan and Germany are like 4 to 4.5.
yeah,
So I think Nvidia eclipses that. It'll be 5 trillion. And so when Nvidia is a $5 trillion company, the only two countries bigger than it will be the US and China. That, I mean, the
mind boggling.
market, the price is truth. The market is speaking its truth. Like, listen to that truth. Um, Again, this was a company that they made video game
Right.
chips from a niche video game chip supplier to a company more valuable than every country in the world besides the United States and China.
Yeah,
That tells you how valuable AI is, the profound impact AI will have. I want to be invested in everything around that epicenter.
definitely. Yeah, you got to get on the train before it takes off.
Exactly right.
All right. So I want to move forward with talking about tech. So Grok 4 just released. Uh
Mhm.
Overall, I've heard good things, and then there were also some dubious headlines. How do you feel about Elon's Grok 4?
I think it is a massive leap forward for Grok. So I've always viewed Grok as a laggard in the AI, the foundational AI model field. We're talking about ChatGPT, Claude, Gemini, Grok, etc. I've always viewed Grok as a laggard. Whether you look at any of the benchmarks, like those AGI tests or the math tests or whatever, you just kind of by your own use cases, I've always found Grok to be a laggard relative to the other foundational AI models.
Hmm.
Grok 4 is not a laggard. Grok 4 across all benchmarks really is testing either at the same level as the leading models from ChatGPT, Gemini, and Claude, or even better on some metrics. So Grok 4 was this massive leapfrog and improvement from a lagging foundational AI model to one of the best in the game. If not, you could make the argument. I'm not going to make the argument. You could make the argument that it's the best in the game now. That's great news for XAI. It's great news for Elon Musk. It's great news for Tesla. But to me, when I see that, I'm like, wow, this is great news for all AI, because the massive leapfrog jump that Grok just made is not unique to Grok. If you've noticed that every single time one of these big boys comes out with a new AI model, ChatGPT 3 to ChatGPT 4,
Right.
Claude to Claude, whatever it may be, right? Those jumps, they're always massive. They're never small. And so when I see this late in the game, quote unquote late in the game, 2022, now we're at 2025, and you're still getting those leapfrog jumps in improvement in capability and intelligence, well, that tells me that when ChatGPT 5 comes out, it's going to be a massive leapfrog jump in productivity, capability, intelligence, all that stuff for ChatGPT. When the next Gemini comes out, it's going to be a leapfrog jump. When the next Claude comes out, it's going to be a leapfrog jump because all these guys, I mean, they're using the same. I know your tricks, Mariachi, right? We talked about
Right.
it last week, right? Like they're all using the same tricks. There is no super competitive differentiation. They're all spending hundreds of billions on compute. They all have these massive, colossal data centers. They all have the same, algorithms and tricks. Like there's some nuances and differences there, okay, but generally speaking, if Grok can make that big of a jump, then ChatGPT can too, and Gemini can too, and Claude can too. And what that tells me is that we're going to get probably two or three more massive foundational AI model upgrade cycles in the next 2 to 3 years. And I think each of them will be this kind of 50% jump higher in capability. That's what I view Grok as. Like when you kind of look at the numbers, it's about 50% better Grok 4 than Grok 3. I think we can get those 50% jumps in ChatGPT 4
Hmm.
to 5 and then to 6. I think we can get that with the Claude and Gemini. I think we get it all across the board. And so what that means is that just the base level of AI for these foundational AI models is going to move up 50% and then 50% and then 50%. So I think we get three 50% jumps in the next 2 to 3 years in just the base level capability of foundational AI models. That's super important because these are, again, foundational AI models. As the name implies, they are the foundation for other AI models. How does Duolingo build all of their AI learning toolkits? How does Axon develop all of their AI software for law enforcement? How does Palantir? How do these companies? They're built on top of these foundational AI models. A lot of their applications, some of them are not, but a lot of the applications you see out there in the world, especially in enterprise AI, are built on top of these foundational AI models. So if these foundational AI models get 50% and then 50% and then 50% better in the next 2 or 3 years, and all the applications on top of them, built on top of them with APIs and all that stuff, are also going to get 50%, then 50%, then 50% better. And so you're going to get this massive exponential increase in the capability of AI applications, I think specifically at the enterprise level, over the next 2 to 3 years. And what that is going to mean is a mass proliferation of much more capable AI throughout corporate America. That's going to be a massive productivity unlock. You're going to see margins move higher. You're going to see jobs lost. And you're going to see the companies making that software see massive demand, huge revenues, hyperscalable businesses, a lot of them because they're software, 80%, 90% gross margins. They're just going to keep on selling software that haven't increased their costs and their profits are going to soar. And you're going to get big winners like AppLovin and Duolingo and Axon. You're going to get those winners again, over and over and over again for the next 2 to 3 years. So I think when I look at Grok 4 and the improvement that it made, really cool for Grok and really cool for Elon and really cool for XAI, but just fabulous, fabulous news for the entire AI application stack, if you will.
Right. Yeah, the real world implications are, it feels like they're happening almost immediately. And it's a little hard to think about 350% increases in something like ChatGPT, but it's happening. I was reading or listening to a report about the disappearance of the middle manager. Several
Mhm.
big tech companies across the board are just getting rid of middle managers essentially because you don't need to. You can use ChatGPT,
Yep.
you can use AI, and then larger or higher up executives are just having more and more reports because you don't need that person in the middle anymore for efficiency because the
Yep.
AI can do it. I think reportedly something I thought was funny is Jensen Huang himself has 60 direct reports, which is crazy to think about.
Yeah, I think that is AI the death of the middle manager, or is the death of the entry level job position? Is it the
Mm,
death of both? No one really knows the answer, but I there will be a lot of job loss in my opinion. Salesforce CEO Mark Benioff said that his company can do 30 to 50%, or 30 to 50% of the work done at his company is AI. But then 2 weeks later, he comes out and says, "But I don't think it's going to take jobs. It's going to be an augmentation of the workforce." I think that's just him saving face, right? That's like
Yeah,
everybody quoted him after that. 30 to 50% of the work, if your company is done by AI, then why can't you fire 30 to 50% of the people in order to save face? And then he's like, you know what? No, we're not going to. It's an augmentation of the workforce. La la la. Now he's just talking. Diplomatic talking points. Um, but I think that if AI is doing 30 to 50% of the work in your company, why do you need, you know, as many people as you have? You don't. And you're seeing more layoff announcements across the board, and I just
right.
think it's going to accelerate and compound. I don't see how it doesn't. And as a result of all that, we're going to get more job loss over the next few years. But weirdly enough, probably for the first time in history, that more job loss is not going to be coincided with lower GDP growth. It's not going to be coincided with lower
Mhm.
consumption. It's not going to be coincided with lower stock prices. It's going to be coincided with higher across the board on those things. So that's going to create a very unique macro, socioeconomic situation. And we kind of talked about it before. What's the tipping point there? I think it's many, many, many years away, and probably a painful transition period for a lot of folks that are woefully unprepared for an AI jobs apocalypse in the next 3 to 5 years.
Got it. Yeah, so I think the note there would be to start building your moat now of, fleshing out your portfolio and things of that nature because those jobs just are not going to be there. If all you've done is consulting, why would you need a consultant if you could just ask ChatGPT, right?
Yeah, you got to build your portfolio around AI stocks, and then you
Yeah.
got to enhance your skills to be an AI architect, right? Learn how to control these AI models in a manner that allows you to be more efficient than your competitor, and therefore allows you to offer the same services at a lower price than your competitor, and then you outprice them, like what Amazon did to Sears. Be the Amazon, don't be the Sears. Right, in a career, in a work environment. And then with investing, invest in Amazon, don't invest in Sears. Right. So do both those things, and I think you will be all right in this AI jobs apocalypse that's coming.
Got it. So now, speaking of building that mode, investing into AI, Meta itself is spending hundreds of billions of dollars into the developing their super centers. So, can you kind of break down that funnel for us? Where should we be looking with the flow of money in terms of like big dogs like the Magnificent Seven spending? Where should we be
Mhm.
looking now?
Yeah, so that they're the top of the funnel. The hyperscalers are the top of the funnel. They have these massive budgets. They're basically, funding their huge AI ambitions with their huge businesses that are already in existence. So Meta is using its massive multi-billion-dollar ad business to fund its AI infrastructure investments, and Amazon's using its massive cloud and retail business to fund its massive AI investments, and Google's using its massive ad business and search business and YouTube business to fund its mass. So they all have these massive existing businesses, and they're taking all the cash flow from the businesses and boom, plowing it into AI infrastructure. Where does all that money go? That's the question, right? Because when the biggest companies in the world are getting a bazooka and shooting hundreds of billions of dollars in one direction, if you want to make money, you probably want to go stand in the direction of those hundreds of billions of dollars where it's being shot.
Yeah.
It's being shot at AI infrastructure, and there's a lot in that supply chain, right? So we talk about data center operators, maybe REITs. That's an interesting place to be. We
Okay.
talk about the energy infrastructure behind these data centers. So Constellation Energy, Vistra, those are stocks that have been really, really hot. Dominion, even the companies providing the energy to power these data centers. I think I read something. One of the big boys is building a data center out in Texas next to this small town, and the data center alone is going to consume more power than the entire town, which has been around for like 100 years or whatever. So it's just
Yeah.
like these things they're power hungry, right? So you got the nuclear names, the next gen nuclear names like Oklo and SMR and
Hmm.
stuff, and Centrus and BWXT. Like those are names that are in this. They're part of that $100 billion bazooka or multi-$100 billion bazooka. They're in the flow of that money. You have companies that are obviously designing the chips, NVIDIA, AMD. I think AMD is really undervalued. We talked about that before.
Yeah.
I think it's got a massive catch-up trade to play with NVIDIA. Um, you have the chip foundry operators, so you're going to look at TSMC. I think all roads lead back to TSMC when we're talking about artificial intelligence. They make every chip out there. ASML designs lithography machines, which are used to, they're very critical to making chips, especially AI
Right.
chips and complex AI chips. So that's a company that's in this multi-hundred billion dollar bazookas pathway. Synopsys, Cadence, EDA software. They create the software that designs these chips. They're in the pathway of this multi-hundred billion dollar bazooka. So there's a lot of companies that are in this pathway, and I think they're going to benefit tremendously. Really, just go look at the leader chart, stocks that are up the most in the last year. And I think you're going to find a lot of companies that are in the pathway of this multi-hundred billion dollar bazooka because this bazooka got pulled out about 2 years ago. It's
Mhm.
stayed out ever since, and they just keep reloading it with more and more ammo. So I say stick with that trade. I think in AI with AI, all in with artificial intelligence, I think those stocks are just going to keep on powering higher.
Got it. So really, it'll almost be safe to say avoid anything overbought at the moment. But if it's been invested into in the past 2 years, it's a safe bet to ride it till, past 2030.
Yeah, I think that 2030 is a bit out there, but I would say definitely in the next 12 to 24 months, you're going to want
Yeah.
to. The stocks that have been winning in the last 12 to 24 months will likely be the stocks that will win in the next 12 to 24 months. The only nuance there, I think, will be maybe somewhat of a shift from the infrastructure layer to
Mhm.
the application layer. I think
Right.
there may be a little bit of a shift there because of the massive increases in the foundational AI models, as well as I think 2025 might be the peak year for AI capex. I think AI capex growth, not overall dollars. Overall dollars are going to keep going up, but I think AI capex dollar growth, year over year percentage growth, I think 25 is the peak and it's expected to slow in 26 and 27.
I see.
And so because of that, I think you may see, I think the infrastructure stocks will still be great bets, but I think you may see a bit of a nuance shift from infrastructure to the application layer.
Got it. Okay. Yeah. AI with AI. I think we need to start putting that on shirts. Anybody interested?
AI with AI.
All right, so I want to talk about robo-taxis. It looks like Tesla is expanding its driving ranges. They're starting to grow. They're starting to pick up. Uber is teaming up with Baidu, so we're going to start seeing more markets outside of the U.S. in terms of robo-taxis. Can you expand on that, Luke? See where we should be looking into that particular market?
Yeah, so I would say I think I love Waymo.
Mhm.
I still think they're going to be a big winner here, but I think the news of the past week is a real knock on the Waymo bull thesis because Waymo's big. I mean, they had a couple big advantages. One of them was scale, and now Tesla seems to be prepared to quickly erode at that scale. To be clear, Waymo is still way, 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 way bigger than Tesla's robotaxi operations. Not even close. But considering Tesla, they just launched, what, like 2, 3 weeks ago. Now they're already talking about expanding driving ranges in Austin. They're already talking about expanding to San Francisco in a month or two. Let's say that they keep that up, right? That they can expand to a new city every 2 months. Then that means in a year they'll be in what, 6 to 7 cities? That's all of a sudden at the same, close to the same number as Waymo. They won't be operating at the same scale as Waymo in those cities, but the fact that they could launch in 6 or 7 cities in 12 months is all of a sudden they're really nipping at the heels of Waymo. So that's like, okay, that's something to note in terms of the Waymo bull thesis. I don't think it like destroys the bull thesis at all. I still think even with that, Waymo wins because again, their scale in those cities is way bigger. They have trust, they have regulator trust, they have consumer trust, they have the built-in network already. So I don't think that's major news. But when coupled with the other news this week, which I think is way bigger, all of a sudden I think the Wimmer bull thesis does looks a little shady. Because if there's one company that can rival Waymo outside of the US, it's Baidu.
Right.
Baidu's Apollo Go program in China is, per my research, about as big as Waymo is in the US. And those are the two biggest robotaxi services in the world. So you have Apollo Go in China, probably 200, 250,000 rides a week, and Waymo in America, 250,000 rides a week. Uber is teaming up with Baidu to go global. That's super interesting because Uber and Waymo were in bed together. Okay,
Mhm.
they were married in this space. And then Waymo started launching in cities without Uber. And then Uber's like, wait, are you trying to replace us? Like, are you trying to go at this
Mhm.
yourself without our ride hailing network? That put tension on the relationship. And so everyone's like, what is Uber going to do? Is Uber just going to kind of really try and woo Waymo and really try and win back a lot of those cities? Or are they going to do this? Are they going to go find a new partner? And they went and found a new partner. And for them to go to China and find a new partner, I think is enormous. Now, China's not going to operate in the U.S. All right, Apollo Go is not coming to the U.S. So Uber and Apollo Go are not going to be a thing in the U.S. I think Uber and Waymo will be a thing in the U.S. There's going to be tension in that relationship. But outside of the U.S., Uber and Apollo Go, I think, could make waves. I think that could make major, major, major waves. Talk about Japan, talk about India, talk about all those markets off in Asia, South Korea. Yeah, I think that's Uber Apollo Go right there. And so all of a sudden, I think the Uber bull thesis got a lot more attractive this week because one of the things I was always concerned about, as you know, we own Uber stock in our model portfolio, we have for a while. It's been a big winner for us. But one thing I've been concerned about recently is Waymo does seem like they're going at it themselves. Because I mean, when I hail a Waymo in Phoenix, Arizona, I don't use the Uber app.
Right.
Well, I'm out of service area. Use the Waymo One app. You know, I don't use the Uber app. How many other people are like that? Why at scale do we need the Uber app? So all of a sudden, I started as a bull of Uber stock. I started thinking to myself, wait, the long-term operational risk here is actually pretty high because Waymo could maybe do this themselves if they really, really wanted to. There are obviously
Mhm.
advantages built in ride-hailing network, and I get those advantages, and I think it'd be smart for Waymo to partner with them. But Waymo clearly, by launching in some cities alone, was testing the waters of how well they could do without Uber. And Uber, as opposed to waiting around for them to find out, if Waymo's going to come back or not in some of these cities, just said, you know what, do your thing, we got Baidu. It's the ultimate Waymo hedge, and I absolutely love it. And to me, it secures the bull thesis, cements the bull thesis on Uber stock as maybe one of, if not the best way to play the self-driving revolution.
Yeah, just an easy pot to buy into, it sounds like, because Uber will cover all of its bases, maybe outside of, well, it probably would include Tesla's robotaxis within its model too, right? Is that safe to say?
No, Uber and Tesla would never. They're direct competitors because Tesla wants to operate its own robotaxi network. Their network is through all the drivers that own the Tesla cars already. That doesn't plug and play into Uber's network at all. So
Gotcha.
that's a direct competitor for Uber. It's more so, outside of that network when you talk about Baidu, talk about Waymo, talk about Zoox, talk about all the other robotaxi providers. Where does Uber fit there? And it seems like Uber is cutting out a niche for itself, not just as the Waymo partner, but as anybody that wants to go to market with a self-driving car, with a robotaxi service that is not named Tesla, is going to use Uber to do that. And that to me, again, I love this news for Uber stock. I was getting a little worried. Now I'm not worried at all. I think Uber stock is going to be a big time winner because of self-driving.
Fantastic. Yeah, I was just thinking about Uber the other day. The company itself has become a verb for getting from point A to point B. I doubt that they're going to be going any away anytime soon, right?
You want to know what else has become a verb?
What's that?
Chat GPT.
Right. Okay.
And that took like 2 years.
Yeah. It took
Like
a.
I was in the car last night. I was driving. My wife and I went to dinner. Driving back from dinner. I forget some question. I forget the question, and we didn't know the answer. And so she pulled out her phone and she said, "Let's chat it."
Oh, wow.
And I was like, "There it is. There's your verb. Let's
Yeah.
chat it." And it's like that. Like it wasn't let's Google it. It
Yeah. Yeah.
wasn't let's look it up. It was let's chat it. And I think that's the new verb. I think that's it. That again, that speaks to the ubiquity of AI models these days. It speaks to their rapid proliferation and adoption, and just another reason to be AI with AI. But yeah, so Uber became a verb, Google became a verb, and now chat's becoming the newest verb. And it took again 2 to 3 years for it to verbify itself. So that to me an impressive testament to the speed of AI.
Definitely. I have not heard that myself. I'm sure this is the first time, but not the last time that I've heard chat it.
Let's chat it.
Yeah, I'm curious to
Chat
see
it, bro. Chat it.
that. Yeah,
Go and chat it.
that's easy. I was wondering about that. It was like, do you GPT it, but chat is
You chat it.
it makes sense.
Chat it.
Yeah, it makes sense.
Chat it, man.
Yeah, I
Go
can't
and
be
chat
mad.
it. What does chat say? People like one syllable. Okay, that's why Uber worked.
Yeah,
Google 25 years ago different.
it's
Now
different.
we have short attention spans. We don't like to talk as much.
Right.
Give us single syllable things. Uber, Lyft, chat.
Chat.
What does chat say? What does chat say? I've used that a lot in mine. What does chat say? When
Yeah,
somebody says something bold that's an opinion, but they state it as a fact, I always say, what does chat say about that?
right.
Then we pull out our phones and ask Chat GPT, and all of a sudden we find out that that opinion is indeed an opinion and not a fact. But
Mm,
in any event, chat is becoming a verb, and that
yeah,
speaks to the ubiquity of AI.
it is cementing itself for sure.
Mm-hmm.
Cool. So I want to move on to the next topic, crypto. So it looks
Yes.
like Bitcoin has just raced past 120. I'm sure in no small part to crypto week coming up. We're getting a bit more regulation on altcoins. So it seems like a fun time for crypto. Can you dive into that, Luke?
Yeah, let me pull up my favorite chart on crypto right now, just so we can start with a technical look on it, because I think this is the most compelling argument really with crypto right now. This is my linear regression analysis on Bitcoin for this cycle. So you can see this is the linear regression trend line, the red one through the cycle, December 2022 to present. Um, the gray lines are one standard deviation above and one standard deviation below that linear regression trend line. And the green lines are two standard deviations above and two standard deviations below that linear regression trend line. So the whole point of this chart is to show that Bitcoin has developed a pattern in this cycle of moving in a stepwise function manner where it essentially cycles from two standard deviations below the trend line to at least one, if not two standard deviations above the trend line. So back here, you see we started in December 2022. We're two standard deviations below the linear regression trend line. We're at 16,000 more or less. And
Right.
then we, boom, have this massive cycle surge up to about 30,000, which is just above one standard deviation above that linear regression trend line. Now this is a log chart, by the way, so it's logarithmic scale, just so everyone's clear on that. And then Bitcoin kind of went sideways and consolidated for a long time. Again, stepwise function manner, big step higher than the consolidation phase. And then boom, we fell to two standard deviations below the linear regression trend line during this consolidation phase. Around October of 23, we're around $27,000. And then boom, we cycle higher to two standard deviations above the linear regression trend line in a hurry. In a few months, by March 24, we're up to $72,000. So big time cycle higher. Then comes the consolidation sideways phase. So consolidate, move sideways, kind of languish, drop a little bit. Then eventually we fall about two standard deviations below the linear regression trend line, September of 2024, right around $50,000. And then boom, big cycle higher to two standard deviations above the linear regression trend line. We went from about 50,000 all the way up to about $110,000 by December of 24. Then most recently, kind of consolidated phase, languished, dropped a little bit all the way down to two standard deviations below the linear regression trend line in April of 2025, right around $75,000. And now I think we are in the midst of one of these big cycles higher, which should take Bitcoin to one to two standard deviations above its linear regression trend line, which would put it between about 100. Let's see, the The low end of that would be about $150,000, and the high end would be about $180,000, or if we hit it later in the year, about $200,000. So my target, based on this linear regression model, which I think is a pretty good one and has a pretty good track record here, would be $150,000 to $200,000 on Bitcoin before the end of the year. And the current leg higher, the current rally is consistent with this cycle higher. So that's the first thing I want to talk about is I think the technicals on Bitcoin are very, very positive. I think an asset like this does trade a lot on technicals. The second thing I want to mention is that altcoins are finally starting to heat up.
Hmm.
We saw a lot of altcoins. I think about a dozen altcoins rallied more than 25% in the last 7 days. The CMC altcoin season index has spiked up towards, I think it was 34th last time I checked. It's been languishing around 17, 18, 19. So getting pretty high there. Bitcoin dominance is falling a little bit. We are starting to see altcoins finally catch a bid. I think what's on deck is going to be a repeat of 2021, where Bitcoin goes higher, but altcoins have their moment. Now, to be clear, this is probably the last hurrah of the cycle. 2021 was the last hurrah of that cycle before we fell into a crypto winter in 2022. But I do think that this hurrah is going to be big. I think it's going to be powerful. I think it's going to be broad. I think it's going to last about 12 months. And then I do think we fall into another crypto winter. I know there are arguments for why we may not, but I think we will. But I do think before we get there, we are going to get a big move in Bitcoin. I think we go to 200,000, and I think altcoins are going to have a lot of relative strength in this last hurrah of the cycle.
That's incredible. I mean, roughly looking at it, it looks like we could see a Bitcoin at 250,000 sometime at maybe like end of next year if the technicals remain consistent.
Yeah, if this trend line does hold up for this cycle, then yeah, like I said, 200,000 I think is a very reasonable target. And then yeah, if you want to get a little bit extended on there, 250 seems possible in this cycle.
Man, it is the gift that keeps giving.
Well, it keeps giving if you have patience, right? I
Right.
mean, the crypto winters are rough. If we zoom out and look at this, right, it's beyond just this log. I mean, the winters are rough, right? I mean,
Yeah.
remember 2022, we fell from 70,000 all the way to 15,000 basically. I mean, that's rough. That was painful. A lot of altcoins got absolutely destroyed, and still haven't recovered. So, if you're patient and selective, then it is the gift that keeps on giving. If you are not patient and not selective, then it's a thief that can bankrupt you, honestly, right? So that's why this is a very risky asset. You got to be careful. You got to be patient. You got to be selective. It's not for your lunch money, but I do think it's something that will have a really good return profile over the next 12 months.
Sounds good. Okay, speaking of return profiles, well, I want to move on to our exponential stocks. To start the pack off, we want to talk about MP.
So we already talked about this one a little
Mm.
bit, actually quite a bit. MP, I think the long-term bull thesis on this as the center of the construction of a domestic rare earth supply chain makes a lot of sense. I think that the value prop is strong. I think that the stock will go higher in the long term. But with an RSI at 84, I think you just have to avoid the stock for now. I would wait for a better entry. I think this one could pull back. What would be a very reasonable pullback point would probably be these peaks right here, which would be a retracement down to 50. So I think we could go down from 60 to 50. And then if it shows support around 50, that's probably a dip buying opportunity. So I would wait for this to retreat to 50 before taking another nibble on MP.
Got it. Okay. Uh, Next up, we have QuantumScape.
Solid state battery maker having a resurgence because their production facilities got a big lift with the new production process, as well as talk that, these batteries could be very important to the physical AI boom. So a lot of these physical AI applications they're powered by batteries. Humanoid robots are powered by batteries. If we do get self-driving cars, they're probably going to be electric cars. I mean, look at Waymo, they're electric. They're
Mhm.
Jaguars, right? Teslas, they're electric. Zooks, they're electric. Pretty much every self-driving car out there right now is electric. So all of a sudden, batteries are becoming a huge component of the physical AI boom. QuantumScape is making batteries that are, next gen, could be really cool, still early stages, but nonetheless, this breakout looks very legitimate. This was the jump on that Cobra production process breakthrough. Then you had a retreat. What I love to see in stocks is when you have a big jump like that, a retreat and then follow through. What's more important than the initial rally is the follow through. How does a stock act after that big initial rally? Well, we got the big initial rally, got a little bit of a retreat, and then we got the follow through. This is just taking out technical levels. Boom. Major high from back here in July, $9 taken out. That was also the major high from back in January 24, taken out, cut through like butter. Now we got this one right here. That's going to be your next technical level to watch. This high from, it was both the September 22 high, the July 22 high, and the February 23 high. That's right around $12. I think this one at 11, it's going to 12. It's going to test that for sure. And if we test that and we break that, then we come up to the 1330, and then I think we can break that. What I'm getting at here is I think this is a real deal breakout in QuantumScape. You can see the long-term stock chart. It has been absolutely decimated. But if
Yeah,
we go to a log format on it, and I love looking at the log format on a stock that's been decimated like this, so then you can start to see where the real important breaks happen. I think the real important breaks are right around here. If we clear this kind of $12 level, it'll tell me this downtrend is officially over and it's ready to retake a lot of these levels. And that would be moves to 20, 30, 40, 50. So I think QuantumScape could be, again, very risky stock, not for your lunch money, but I think it could be in the early innings of a pretty massive recovery rally, powered by the need for next gen batteries and physical AI applications.
impressive. Something I feel like that keeps reoccurring with certain stocks is we're seeing a couple of these stocks that are just getting the chance to live up to the hype they had before that 2022 crash. If that's
Mm-hmm.
fair to say.
I think that's exactly right. I think what happened in 2020, 2021 is you had a bunch of, because of the SPAC boom, you had a bunch of VC style companies, venture style companies that had no business going public, went public, because the stock market, does not have patience. It does not
Yeah,
wait for the long term. It's quarter to quarter. It's short term oriented. That's how those investors are wired. And so when you give investors that are wired to judge based on quarter to quarter developments, a company that is early stage and working on a multi year breakthrough, then yeah, they're going to be disappointed quarter after quarter when that multi year breakthrough doesn't show up. But now I think with a few of these companies that did have that SPAC IPO and then the big bust are now making big comebacks because guess what? Lo behold, nothing really changed in these 5 years. They just kept grinding, and now those multi-year breakthroughs are starting to bear fruit. And Wall Street's like, oh wait, it's happening.
it's
And so
happening.
yeah, I think it is that happened with AST Space Mobile,
Yep,
that happened with Rocket Lab, it's happening with QuantumScape. I think it's happening with quite a few of those kind of SPAC IPO busts that I think are now becoming, they're becoming boom stocks once again.
for sure. Okay, on to the next one. We have, looks like AIRO Group Holdings.
Yeah, so this is like an eVTOL military AI defense play. One of my analysts kind of caught this one before I did, and I'm kind of upset that I missed it. The chart here, let me get it on a tick basis because it hasn't been public for that long. There you go. Yes, this one IPO'd very recently, had that big jump. You can see IPO price right around 14 and then jumped all the way to 34. Then it consolidated for a bit, retreated all the way back down to below. We're right around 20 and then it jumped up to 29, and now it's right around, consolidating those upper 20s. I think the fundamentals of the company make a lot of sense. I love the intersection of eVTOLs, military, AI, autonomy. It's in the right place at the right time. I think they have really good contracts. I like the numbers on it. The stock chart acts like, hey, you had that big IPO jump. Remember, the fall through is more important than the initial rally. So we had that initial rally, kind of retreated. Now here's the follow through. We're coming back. I like that action. I think this one is probably a long term winner, but very speculative. So, again, not for your lunch money, but I think this stock does have more runway left. It's been a big winner in the last week or two, but I think it's got more runway left.
Got it. This company will probably be subsisting off of military contracts.
Yes,
Yeah.
yes. Military contracts is the bread and butter of AIRO.
Yeah. Wow. There's always going to be those. One thing about America.
Always going to be though, especially with the current geopolitical situation
Yeah,
globally.
exactly. Okay. Next up, we have Amprius Technologies.
AMPX. I hope I don't get the tick by tick chart. Do I get? Yep, I do. Let me get the daily on it. Sorry, daily 1 year on it. I mean, this one has just been absolutely wild. Let me get rid of the log format. High to low. I mean, look at that. Holy moly! From what, $2 to $8. That's big time. So Amprius Technologies kind of upset that I missed this one. I think the bold thesis was it's risky, but it makes sense to me. So the company is batteries again.
Hmm.
So QuantumScape type, right? Not solid state, but batteries for mobility applications. They do silicon anode lithium ion batteries. So that goes into self-driving cars. That could go into robots. It could go into all these applications. So like QuantumScape, this is a company that is developing batteries that could be at the epicenter of the physical AI wave. You're seeing these stocks move in tandem. That's not a coincidence. I like QuantumScape over Amprius because I think the technology is a little bit better. But Amprius, clearly the market likes this one. And when I have something that's supplying batteries to physical AI applications, I'm not going to say no. So, hey, I think this one's going to get my stamp of approval. I think this one can keep pushing higher.
Awesome. So again, a repeat of that thesis of a ton of money at the top of the funnel going into various stocks that are just kind of fringing on AI, right?
That is AI with AI, man. When
With
there's
AI.
people, when these companies have these bazookas loaded with hundreds of billions of dollars and they are firing them just willy-nilly, you need to go out there and be in the firing zone, be in the
Mhm.
firing range. Amprius is there. QuantumScape is there. What was the other one? AIRO is there. These companies are there. That's why they're on our weekly scan. That's why they're soaring. That's where you need to be invested. My 2 cents.
Got it. And then the next one, similar to Arrow, Red Cat Holdings.
Yeah, so here we go. Also in the bazooka firing range, rather. This stock has been red hot, defense name. Stock, let's talk about the technicals first. Looks really good here. Boom, 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 boom. We have the stock that bounced off its 200-day, big jump up to $10. But as you can see, this uptrend has been happening for quite a while, actually, ever since kind of bottomed out in February 24. So we're talking a 12 plus month uptrend here in an RCAT stock. I like that. This one is one that's steady. It's not slow and steady. It's fast and steady, but
Yeah.
it's steady, and I do like that. Fundamentally, the company's in that kind of military AI defense space. They they're mostly involved with drones, actually, unmanned aerial vehicles, UAVs, and that is becoming very important in the military world. Right, a lot of the warfare that was happening in the Middle East and is still happening. Really, a lot of it is drone warfare. Red Cat provides a lot of software solutions, cloud analytics for these drones. So again, it's in that bazooka space, and I think the stock is showing a lot of promise, and I don't think it's going to be fatigued anytime soon. So I think this one does go higher.
Amazing. Yep. Stay in front of that firing range and you will be rewarded, right?
Yeah, that's kind of the big MO here, right? Is just again, that's why I want to be all in or AI with AI. I just think that hey, there's only so much money in the world,
Hmm.
um, and a disproportionately large percentage of it is being allocated to AI things, whether that's building new AI data centers or making new AI chips or establishing new energy infrastructure for AI or developing new AI applications, making new foundational AI models, creating humanoid robots, deploying self driving cars, integrating AI into the military and defense, integrating AI into space applications. That's where all the money's going. So I'm going to go where the money's going. That's where the action's happening on Wall Street. That's where the big winners are. And that's why I say AI with AI, all in with artificial intelligence. For example, I love Lululemon stock. We own it in our model portfolio,
Yeah.
but I'm not pounding on the table on it for anybody right now. I think they make great clothes. I think they're a great company in the long term. I think the stocks can reward people in the long term. But you come to me right now and you say what stocks should we buy? We're talking about stocks to buy and stuff. We're not talking about Lululemon. We're not talking about Lululemon.
Right.
I think every once in a while you'll get a contrarian opportunity out there, like Disney. We bought Disney on a dip a few months ago. It's been a great play, worked out wonderfully for us. So every once in a while you will get a contrarian opportunity like that, but outside of a contrarian opportunity like that, right now it's AI with AI. That's where you got to be. So there are other companies I like, other companies I think are doing interesting stuff. But frankly, in terms of investing in AI in the stock market in stocks, if it's not at least tangentially related to AI, then I don't care about it right now.
Hmm.
'Cause that's where the money is, and I'm going to go where the money is. The purpose of the market is to make money, so let's follow the money and make money.
100% follow the money.
There you go.
Okay, AI with AI. So this week we don't have lifestyle, and I don't have a question. What I would like to do is just urge our audience, bring in your questions, ask away, type in the comments. We want to hear from you. We want to make this a conversation with our viewers. So please ask away, and we will try to answer your questions on this podcast. Now, Luke, do you feel like there's anything we might have missed that we haven't discussed so far this week?
No, I think we covered quite the range of topics. Talked about what I wanted to talk about. Talked about some of the greatest stocks out there, and I think that again, just the 400-foot view is AI with AI.
Yeah,
Find the best opportunities in AI, and then 5 years down the line, we can talk about other things. But right now, follow the money.
follow the money. I love it. And we will get those AI with AI shirts going. Keep an eye out, everybody. All right, that's been another week of Being Exponential with Luke Lango. Thank you for joining us, and we hope to see you next week. Take care.